Hello traders, welcome to the weekly outlook and setups volume 238. Iliya here. You know what we're going to be doing, having a look at the markets, how they developed this week, what kind of opportunities we had, and most importantly, what we can expect for the upcoming week. Now, this week was overall choppy up until Friday, where we had a lot of momentum, which is also building up a very nice bias going into next week, which is also super heavily packed with news. So of course, let's explore all the pairs, let's draw some conclusions and see what are we going to be doing next week. Let's of course start with a brief look at the economic calendar because we can potentially frame our trading week based on the calendar. But as we can see, we are having a lot of stuff going on and it's a lot of red popping to my eyes. So on Monday, we're starting with some Euro news, which means that, so we have this German CPI, which is very important. As you can see, it's major impact. We have Spanish flash CPI. So I would expect the Euro to potentially already move on Monday. So I'm going to be vigilant there. Then on Tuesday, we have some NZD, Aussie, Euro, CAD, GDP, USD, Employment Cost Index, major impact, okay? And consumer confidence. So again, you can see Tuesday is pretty volatile as well, especially during US session. And then on Wednesday, that is pretty much the highlight because we have FOMC statement, federal funds rate. Super important. That is also paired with some PMIs. And what is very interesting is that the funds rate is quite late. So that's 9 p.m. That is London has closed a long time ago. And that is also getting towards like not really New York close, but rather late during the day. So what that means is that potentially Wednesday, in the morning, the whole day is not tradable. We also have some bank holidays, so I'm absolutely skipping Wednesday until that news release is out. So again, my main focus will be to see if I can take something quick on Monday and Tuesday, right? And then potentially let Wednesday go and then jump back on Thursday where we have unemployment claims for the US, Swiss franc CPI, don't care much, CAT as well, not trading Swiss franc and CAT. So again, we have some news during US session here. And then on Friday, we are having actually NFP. So looks like one of those weeks that you have to be really careful and potentially even, I would say, skip. Because you have two super important news. It is the first week of the month, which is usually quite tricky, right? So I would say let's be very vigilant. Let's be very patient and let's be a little bit careful because again, we don't know what is going to happen on interest rate. That is following by NFP. So pretty much Thursday before NFP day is not a very high probability trade day to be trading. And the same goes for Tuesday before the US CPI. The market is just going to be, before the US funds rate, the market is just going to be waiting for that. So again, keeping that in mind, not really going to be rushing into anything, just patiently waiting. Sometimes you have to give up one whole week to get a clear price action into the next week. All right, back on the charts. Now, here again on the DXY, we're having this monthly bearish imbalance, just to build up a little bit of context. That monthly bearish imbalance is actually failing. We had the first candle here come and reject. The second candle tried to push lower, but failed, swept the previous candle low here. And right now it looks like we're starting to climb higher with my overall macro drawn liquidity being that monthly high. And what I think is going to be happening into next week with all the news that we're having and also within the monthly closure, because in 3 days we're going to be having the monthly candle closing, I do believe we could actually pop that liquidity quite fast. If you already have a look, we're already having this weekly bullish imbalance that acts as a potential context for the market to potentially then head for that monthly high. So right now, not only we have this monthly high, but we also have that weekly high that is just waiting to get smashed, okay? Which is why I do believe Monday and Tuesday could be volatile because right now within this weekly candle, we're having a beautiful rejection on the DXY, which just tells me, all right, we could be going higher. You can see this week, why I said it was rather choppy up until Friday. Well, it was. Monday chopped, then Tuesday got us into that weekly imbalance. Wednesday chopped, created this daily bearish imbalance from which we actually reacted on Thursday. We tapped in, took out the lows, came deep into that weekly imbalance, and then on Friday, had some nice trades on Friday. We swept the previous daily low and we started rejecting, pushing above, And right now, again, I do believe the next target is that weekly high. Then the next question, of course, becomes how are we going to be getting to that weekly high? Well, we already had a hourly bullish imbalance here that the market already tapped on Friday, which is why I think the market could just open next week and it could really fast potentially start running towards that liquidity and then maybe start consolidating for all the incoming news. So if I can manage to catch something early in the week, like for example on the hourly time frame, if the hourly starts trending higher, then looking for some continuations, that will be great. So keep that in mind, okay? We could be having a nice Monday and Tuesday, but then we have Wednesday chop. Thursday is gonna be tricky because it's before NFP, and then Friday is the NFP, where of course we don't know what's gonna happen until then. So that is my DXY outlook. I am super bullish on the DXY right now, so I'm gonna be trying to catch longs until all the news events actually start coming out. EUR/USD is pretty much the same situation with the DXY, but in reverse. We're having this monthly low to potentially target because we failed this monthly bullish imbalance. We tapped in, we tried to react, we failed, and right now we're pretty much breaking it. So I would expect for it to potentially continue going lower. Similar to the DXY, we had this very nice weekly bearish imbalance that we have been working with this week. This also very nicely aligns with this overall area here. Now, of course, you can take, for example, this is why I don't like all the blocks, right? I've studied them, of course, mitigation, breaker, order block, propulsion, and all the stuff that ICT has. I don't like them because they tend to be a little bit subjective. So, for example, here I can take this mitigation block, this whole thing, but you can also take this whole thing, which is the OB, but then you can also take the OB from the body, right? So I keep it very, 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 very simple, okay? So, of course, we have this overall big buy to sell. The market came back to literally retest structure, all right? But what is more important to me is the imbalance, because that shows me where the market potentially wants to go to rebalance and where we can actually then from here start going down to seek the liquidity. So we are already rejecting from that weekly imbalance. So I would right now start expecting for the market to potentially start going lower. There's a slight bit problem with EU is that it actually on the way up, it printed that bullish daily imbalance. And unlike the DXY that is already kind of tapped into that imbalance and already starting to take it out, EU actually just closed inside. We had a lovely short trade on Friday, had some members taking 10-hour trades. I personally took a 2-hour. But right now we're tapping inside this daily demand and we could expect a little reaction. However, if I start getting 4-hourly structure and bearish imbalances going lower, I will be really happy to start going short. We do in fact have one, right? And what I see is that there is a difference between the DXY and EU. You can see the EU has all of these lows right here. It looks very far away from the target, while the DXY looks rather close. It can come and take it very quickly, and then everything can start chopping, okay? So I am going to be trading mainly with the DXY in my mind, that it could actually go to take out these highs, and when it takes out these highs, then I will be potentially looking to stop trading EU. So pretty much for next week, I will be looking for some sort of a short. Are we going to pull back into this FOH to flush lower? I don't know. If it does, great. If not, if we start building new bearish order flow ranges going lower, so structure breaks with imbalances, then potentially I will be looking to continue the shorts. Again, either tapping into this FOH and then getting, for example, 15-minute, 5-minute confirmations, or printing new 1-hourly bearish going lower, and then of course getting that the same confirmations on the lower time frames. That is my plan for EU. Bearish bias for now. The only thing that right now can stop price from pushing lower is that daily imbalance, which we are already taking the reaction from. So if we actually start committing to the downside, I do believe we can have a very easy run into all of these lows. Now, of course, I will be targeting low-hanging fruits. So for example, this swing low look pretty good. Like if I try to see it on the daily, well, on the daily, they're all the same. So again, don't try to target the bottom because the DXY could take out that high and then it could start reversing. So again, take a quick short, like for example, the one I personally took on Friday after we swept the previous daily high. We had this 15-minute structure and 15-minute order flow going lower. So I just very simply took a trade from here, had a stop loss there, and I took a 2-hour. That is my trade. Now I had, so for example, people entering from here that had a stop loss above like that. So they rode it all the way to our projected level, which is this daily imbalance, which was quite a nice trade. But personally, only took a 2-hour and very, very happy with this. So that's your USD. Let's see how it goes next week, looking very nicely bearish. Having a look at GU, now of course we have a key difference here is that we have this untapped monthly bullish imbalance that could potentially cause price to bounce a little bit. And we can already see it, it's like starting to bounce with a little bit more power, but it's exactly the same as the rest of the pairs. We're tapping into that weekly bearish imbalance, from which right now we can potentially be looking to expect a bearish reaction if of course the DXY is going to follow through as well. Let's see. Now, it looks a little bit more bullish. Like if you have a look at EU, for example, the candle is a very nicer rejection. It's kind of didn't really make a very massive bullish pullback. Well, this one was quite massive, but that is because it first started actually with being a little bit too bearish. So right now the pullback is actually bigger. Tapping into that weekly imbalance right now, we're already getting the reaction here with the Friday's candle. We also failed to make a new daily bullish imbalance, which is always a good case. Now, the only potential area of struggle we have, and by area of struggle, I mean old imbalances or old, like for example, supply and demand zones that are not tapped. And usually when they're not tapped or mitigated, as you know, then the market could potentially come in and cause a reaction, right? So those are reaction areas. Those are areas of struggle, how I like to call them, where the market can potentially struggle a little bit before maybe it actually continues with the overall bias. So always be aware of those levels. So if you're actually looking for shorts, I would say target that daily bullish imbalance and then from there see what is going on. Now, unlike EU, GU is not giving me a lot to work with on both on the daily, right? We're having this very nice Friday rejection, but then on the hourly time frame, unlike EU, this one did not print a bearish hourly imbalance. It doesn't look as weak as EU, and on the hourly time frame we had this bearish move and then we ended up with this bullish move. So bearish, bullish, V shape, not great. This is not order flow right now. So when it comes to GU, in this case I would much prefer to trade EU because it's giving me much better signs. But of course, if EU actually goes lower, then GU will very likely also start following through towards that daily imbalance, and then from there we have to see what is going on. Okay, always keeping an open mind. Why? Because I see that we're having a lot of bullishness coming in from that monthly zone. Okay, so again, going short on GU was low probability this week pretty much, because I was very well aware we were tapping inside this monthly zone. And although we had, for example, some shorts right here, the market came in, reacted, and this here was a beautiful short. So again, Thursday rejected, Friday flushed, Monday continued to flush. Then I knew that potentially we can start recovering a little bit and bouncing because we have this monthly demand here, imbalance. So let's see, much prefer EU. This one looks slightly bit more bullish, giving me a different sentiment. So I'm going to be careful shorting. But if I get hourly and hourly imbalances going lower to confirm that order flow, then I could get interested. All right, let's have a look at AU. Now, on the monthly time frame, we also do have this bullish monthly imbalance. The market came in, tried to go out, failed, and this month is a very big indecision, sweeping very nicely like this monthly low and the previous monthly low, and rejecting. So it's giving me a lot of mixed vibes. Not sure if it's gonna go up, not sure if it's gonna go down, and usually that is not a great thing. In this case, we try to consider, of course, the lower time frames. Now, the weekly time frame was extremely choppy on Aussie dollar. We had a very long, since we tapped into that monthly imbalance, we had a very long period of a choppiness. Then we started launching lower, but what I did not like about AU is that it didn't really have any bearish weekly imbalances. GU did, EU did, AU did not. So that is immediately a red flag that it's not as bearish as we would like for it to be, for example. And right now we can see this week is a very nice bullish candle. Like if I just read the candles right now, this is giving me a lot of bullish vibes. So I would say we could potentially even expect the bullish continuation. Now, areas of struggle, AOS, we're having this daily bearish imbalance. This is pretty much, you can use this as your draw on liquidity this week, because that is the potential area where the market can cause a reaction. And you can see we just came in right there precisely and we rejected very nicely. Damn, that was a nice rhyme. The thing we have to the upside is this daily bullish imbalance. And then of course the last here 3 days, the market ran away from that daily bullish imbalance, which sucks. We could have taken a long from here. but it came into that bearish one, and right now we have a slight little bit of sandwich. So I don't have a clear context to potentially go both short or long. I am not sure what is happening on the monthly and the weekly. I am more bullish, I would say, than bearish. On the hourly time frame, there could have been some trades here. We had like a push, a pullback into the imbalance, reacted, and it came all the way back down. Like this, I really didn't like this. This looked like a sweep of this high to potentially sweep then this low, but it did not. And then it very slowly started making its way higher towards that daily imbalance here. So what I essentially want to see right now is two things. Either for the market to pull back into this daily zone and then maybe start building bullishness so I can go long, okay? Or if it's actually going to go long immediately, to start pushing higher, making 4 hourly breaks of structure with imbalances, and then to potentially trade it higher. So I don't like that I'm bullish on AUDUSD because I'm also bullish on the DXY, and that doesn't make sense. And I'm bearish on EU and GU. So being bullish on Aussie dollar does not make sense. I do find that, for example, AU and NU move slightly bit differently from the EU and GU, like the main majors. But right now, this is how I'm going to be looking at it. Like immediately coming into next week, it doesn't look like an immediate opportunity. So we have to wait for something more to happen. Again, you always need the zone to trade from. Right now, I don't want to go short from this daily zone because that's an old zone. This is, I expect the market to make a reaction to then go up with the most recent order flow. But I cannot also go long because we don't have also any zone to go long from. You can take this very big sell candle as a potential OB. We also do, like, if you really look into it, you could always, of course, force it. We have this also 4-hourly imbalance that the market is just pinging. But again, as I said, I would like to see a little bit more confirmation by seeing new order flow ranges going higher. So that's AU, more bullish bias, which is sketchy because, again, I'm bearish on EU and GU. Let's see what kind of signs will NZUSD give us. Well, the monthly candle so far, it's not very bearish. It's not bullish as well. So kind of 50-50. Again, we had this bullish monthly imbalance that failed. So again, technically right now we can target this monthly low as liquidity because this bullish order flow range is failing. So it becomes weak. On the weekly time frame, of course, we are following through from that weekly bearish imbalance. But what we also failed to do is to make a new one, which is usually not a very good sign. So on the weekly time frame, pulling back, rejecting above the previous weekly high, which is pretty nice. And also from the bottom, rejecting from this swing low to the left. So right now we're just taking liquidity up and down, and we really have to establish a direction. Now dropping onto the daily, look at the last couple of candles. There is no volume, there is no volatility, there is no imbalances. So this market is either waiting for something, some sort of news, or it's just overall choppy. Now, we had this daily here, the market tapped it, took out the contextual low, and then started reversing. Where does it reverse to? Usually something on the weekly, but we don't have anything on the weekly. So what we do have is this whole area here that the market potentially wants to rebalance, which is paired with this daily bearish imbalance as well. We came in, reacted. Second day also reacted, but look at the choppiness. So if this market is going to go down, I would like to start seeing 4 hourly breaks of structure lower and pretty much a bearish market. Okay. So for example, break this structure lower here with a very nice imbalance and then start showing me that it actually wants to go down. Now here you can see once again, I had a lot of bullish vibes on AU, but I have bearish vibes on NZUSD. So which one is the sketchy one? Which one is the imposter? Is this also going to go down together with NU, or is NU going to go up eventually together with AU? So very sketchy, but if I am to trade something, I would pick AU right now. It looks a little bit cleaner for longs. While on NZUSD, I will be looking for 4 hourly breaks of structure and 4 hourly imbalances lower to confirm that we're bearish. And then only then I'm going to be trading it. Because again, could open, could start printing bullishness. And then guess what? I'm going to go bullish. I really don't care about forecasts. I don't care what is going to happen next, because every single morning I jump on the chart, I see what has happened and how, of course, I can adapt and act on it. So again, think in terms of scenarios and make sure to flow with the market. Let's have a look at GOAT. Now, when it comes to price positioning, which is pretty much where the market is positioned right now, it is at a hard high. It is at an all-time high. And just in 3 days, we're going to be having a monthly bullish imbalance that can potentially act as a magnet for the market to pull back towards it. So we could have some short-term bearishness so that gold can pull back to rebalance because it is a little bit high. Now, dropping to the weekly time frame, the thing that can potentially stop price from actually pulling back into this monthly zone is, of course, the weekly zone. If the weekly fails, then it's going to go to the monthly. Okay? So this week, we're actually coming inside this weekly zone and we're starting to reject a little bit, which is good. It's all right. Now, on the daily time frame, what I like on the daily is that we had this bearish imbalance right here, and the market tapped it on Wednesday. Thursday came in, and then Friday also came in. Now, what I don't like a lot is that we're just keeping sweeping these previous daily highs without really closing above it. But as I see this overall consolidation here, like candle 1 failed, candle 2 failed, candle 3 failed, just getting into that imbalance, and just like wicking, we're coming from that weekly zone. So I do have also a potential bullish scenario here. Now, the bearish scenario, of course, will be if the market actually fails to go higher, and then I would automatically know that it would like to go to that monthly zone. So then we can have actually a pretty nice short. But if from this weekly zone, the market actually decides to go higher, then we're going to be seeing this potentially on the daily and on the hourly time frame. We had some nice trades this week in the community for longs. The first one was from this hourly imbalance targeting the daily imbalance. That was a very quick scalp. And then we had the previous daily low sweep here, and there was another long entry right here. So not the best though. I didn't like it because we were very choppy overall, so it was not extremely clear. Right now, the last thing we have on the hourly time frame is this hourly bullish imbalance here. So that is pretty much what I'm going to be observing to see, is it going to hold or not. We already kind of came in, rejected, then second candle came in, massively rejected. So if it's gonna go bullish, gold, I would wait for it to make a nice pop higher to break this structure and then to start giving me the bullish signs. Okay, if this hourly bullish imbalance fails, then that literally means that this is going to become weak. So then we can, of course, trade into this. And that can also mean that the market might actually want to come back to rebalance this monthly bullish imbalance as well. So with all the news as well that are incoming for the US dollar, I would be very careful trading gold. You can see it's already getting a little bit choppy, potentially awaiting all of those news. Because again, price is like, how to say it, everything is already built up in price and in the market. Institutions know that next week we're going to be having the news. So they start chopping the market before that because, again, they don't want to move it before the news. So gold is going to do what it wants to do during the news. Now, again, our job is to potentially forecast what it could do. But when it comes to major news like this, we simply cannot. Currently, I am more bullish based on this weekly bullish imbalance, but also being aware that we have a monthly bullish one to get potential rebalanced. And if, for example, right now the hourly time frame starts failing to show me bullish signs in the form of bullish structure and starts showing me bearish signs, then I'm just going to flow. Then if I get the bearishness, I'm going to target this low. And then eventually, if the bearishness continues, I'm going to target the monthly imbalance. But of course, more on that, I'm going to be updating you within the next weekly outlooks and, of course, within Flow with the Markets Wednesday. So watch out on gold. Wait for more confirmation. Well, USD JPY and the JPYs overall are just on a killer streak going into the highs, reaching all-time highs. But yeah, I think on USD JPY was like 30 or something years high, so extremely high. Weekly time frame, we are getting a massive expansion this week. Now, of course, we do have this weekly bullish imbalance, but the market didn't really care to tap into this one, and it just massively continues higher. Daily time frame, on Friday, of course, during the news, the market just pinged into that daily bullish imbalance here, and it just rocketed. Right? Wow, Friday was crazy. And yeah, we can see then transferring onto the 40 time frame. It was a little bit sloppy here. You can see it was choppy. Then we impulse higher. Then, of course, you have this hourly bullish imbalance that fails. Why? Because there is a daily already being built up. And then during the news, the market just came in to ping into that daily, and then it just, whoa, massive. So yeah, currently I would say for USD JPY, the daily is massively expanding. We can be waiting for another daily bullish imbalance to form. Hourly time frame is having, like, for example, this hourly zone, but I would prefer to be trading from daily zones right now. And honestly, this expansion making like new highs that we haven't been here before. I don't like it. Personally, again, I would love for the market to pull back and then have a high to target. Because what we're doing right now is we're trying to like go long and keep making new highs, which is of course a low probability rather than having a pullback and then target the high that is already set up as liquidity. So currently I would wait for some sort of a pullback potentially. I'm not trading UJ, but if I did, I will be looking for a daily imbalance. So potentially for Monday to close to make that daily bullish imbalance and then to potentially see how we're going to tap inside and if we're going to be reacting from it. As of right now, I do hope some of you managed to catch some sort of longs on UJ. Let me know in the comments if you did. But as of right now, then I'm just on the sidelines and waiting for some sort of pullbacks to then go long. Euro yen getting very close to 2008 highs. You can see we're getting super close right here. So that is very likely where the market is potentially going, which is the very nice round number of 170, like precisely. So getting there very fast, very likely we're going to get there next week. This week, we're massively expanding again with the overall JPY sentiment. Again, you can see the market started slow, goes bigger, and then on Friday, it just rocketed. Daily time frame, again, we can have a daily bullish imbalance created after Monday closes, and then potentially see if we can trade into that and then into the all-time highs here. If not, then if the market takes out this high, 170 level, I will be looking to stop trading it because that's a very massive liquidity point and we could be expecting some sort of a reversal. On the hourly time frame, the very last potential point of interest we have is this hourly imbalance, but the market is running away from it. And on the hourly time frame, we're just pushing. So right now, the market is in the massive push phase. So again, I want to see a pullback and then potentially continuation. How will that pullback happen? On which time frame will it happen? Well, I prefer for the daily again to form a daily bullish imbalance. We then tap into that daily bullish imbalance. Then I'm looking for hourly and 50-minute time frame to confirm the bullishness and then to potentially target this 170 level. If the market just opens and rockets to the 170 level, then I don't care, right? So rather tricky on the JPYs, they're massively expanding. If you are in a trade, then you are good. But if you're looking to get in right now, I think you're slightly bit late to the party, but of course, if we do get some nice pullbacks, could be a nice long. Well, looking at GJ, it is already taking that high here that we have on Euro JPY. This is the 196 level here. So right now, looking to the left, we have this imbalance that the market is tapping into where we can expect a reaction. This is also very nice buy to sell OB here that the market could get a reaction. So there could be some sort of a reaction incoming on the JPY. So yeah, make sure to be aware of that. If you got long, then you should be looking good. The thing is, like, it was looking super choppy right here. And then all of a sudden you have this 1 week that the market just massively starts to impulse. Again, as I told you on GOAT, the market already knows what is going to happen. Institutions already know where they're going to push the market. They're just waiting for the right fundamentals. They're just waiting for, like, for example, news releases to then, of course, make their move. So here you can see we got really chopped up. If you are only trading GBP JPY, you probably got chopped up here for how much time? For a month. You got chopped up and you were long bias. And then all of a sudden your long bias plays out massively, but you couldn't get in, right? And this always sucks. So massive daily candle here, massive weekly candle, massive daily candle, and on the hourly time frame as well, just continuing crazily higher. We could have potentially had some opportunities. There's, for example, very nice hourly imbalance that tapped, respected, and even if you take it from here where the stop loss below, you should be safe. You would be safe because the market then pings very nicely lower. If you were not break even, then it just continues to go higher. The very recent point of interest we have is this hourly bullish imbalance. So of course, I would be looking again for the daily to form. So one more daily candle to print to form that daily bullish imbalance to potentially trade from. And then, of course, we have this hourly imbalance to act as a confluence. But as of right now, I do not like to trade such expansive markets that are just at a higher high. So I wait for the market to form a higher low, pull back into an imbalance level, and then I target a new higher high. Currently, higher high, so we have to wait for that pullback. All right, so indices are getting super interesting. Now, of course, I would love to see the market come all the way here to pretty much retest this very big sell to buy here, which is like a quarterly or a yearly one candle, for example. But right now we're tapping inside this monthly bullish imbalance, which is the first area of struggle. That is pretty much the imbalance that we can potentially go higher from right now. And it's looking like it's rejecting very nicely. Now, what I also love about SPX is that it failed to form a weekly bearish imbalance, which is automatically a bullish sign. Automatically a bullish sign, and we do not have anything bearish as well here to stop price from going higher. And right now we're also starting to get the daily time frame starting to show us a little bit of a bullishness. The bullishness that I can get to is slightly bit unusual, because instead of like having daily bullish imbalances and daily bullish structure, what I'm looking at is that we had this only bearish daily imbalance to the left that the market tapped in. It looked like it wanted to respect, but then on Thursday we very nicely pinched into the lows, and then we very nicely closed very nicely on Thursday, right? Friday was a consolidation. So again, we are having a lot of news next week that are going to impact the indices. I am biased because I didn't buy anything, because I was waiting for the market to get lower, so I didn't buy down there, which is something that I should have done. But again, the market could start rocking higher already. So just keep that in mind. If it goes lower, beautiful. Okay. Now, on the daily time frame, this is the only thing that we can work with. And on the 40 time frame, it was rather tricky. We had this bullish here, very nice long. Then we had this bearishness. Then we had this pretty much what we worked with on Friday was this imbalance here. And then the market tapped it. It took out the high, but it's not making anything new. We don't have daily bullish, we don't have hourly bullish, and I'm not going to refer to the hourly. So I would simply say I am going to be waiting for something more to happen on the SPX. A daily bullish imbalance or clear hourly bullish imbalances, because we had like bullish, then we had bearish, right now we have bullish. It's respected, but if this market is going to go higher, I would like for it to actually see it going higher. Right now, it's a little bit choppy, especially after Friday's candle. So I would say I'm going to wait this week. Fed funds rate, NFP, to see how the stock market is going to react to that. For all the earnings also to come out. And then I will potentially be looking to get into trading it. Right now for investing, I'm a little bit pissed that I didn't buy from that monthly imbalance. But again, I have very specific levels that I'm looking to buy from. If they don't get reached, then of course I don't care. So that's SPX. Let's have a look what the others are showing us. The monthly candle on Nasdaq is already looking like a very nice rejection. Again, coming from that monthly zone here. We're also having this monthly zone here. So it's a lot of support that the market is encountering right now. So if I just plot in this monthly imbalance right here, we are very nicely sniping into it and very nicely rejecting. Now, on the weekly time frame, unlike SPX, here we do have a weekly imbalance. So that is where we have the supply and demand sandwich right now, tapping into a monthly bullish and tapping into a weekly bearish. Which one is going to prevail? Usually it's the monthly, because it's a higher time frame. Makes sense. But of course, depending on the sentiment, that weekly can also cause the market to flip down. So it all right now depends on sentiment. And pretty much on the daily time frame here, you can see, unlike SPX, Nasdaq had a daily bullish imbalance that it actually reacted from and very nicely pushed higher to fulfill that daily high, driving us into that overall creation of that weekly imbalance. So currently we don't have anything on the daily, and on the 40 time frame, of course, we did have this very nice long on Friday. I took a very lovely long, by the way, on DAX. I just saw it and it looked pretty good. And right now we have this very tiny hourly zone to potentially guide us into the weekly zone. So a very short-term trade for me will be something like this. If I'm scalping, if I'm looking for something very short-term like that, that will be nice, because we're having pretty much that weekly imbalance that is just resting above current price. So then we tap into that weekly imbalance, and then from there we have to just wait and evaluate what is going to happen, and of course wait for all the news. So that is Nasdaq, a very short-term bullish bias on this one, looking to see how it's going to respond from that weekly zone. And if I see signs that this weekly zone is failing, then guess what? We can already start targeting the all-time highs, because there is nothing else to stop price from pretty much reaching all-time highs. Of course, that is based on technicals. Fundamentals can come in and can literally change the sentiment and everything. But right now, I am short-term bullish into that weekly imbalance. let's see what is going to happen next week. Let's see what US30 can potentially tell us. We are also having that monthly bullish imbalance that the market is retesting. We of course have one just below here that the market came very close to, but are we going to get there? Of course, we don't know. Now on the weekly time frame, this is very interesting because we have a very similar situation to Euro USD, to GBP USD, to the DXY. We're having this bearish weekly imbalance, but we're also reacting from a monthly bullish. So we have this supply and demand sandwich. Now this one is tapping, and it looks so far that it's a nice rejection. Not the best because it's a bullish body, but it has a very nice wick on top. Now, dropping into the daily time frame, what we have is we have this daily bullish imbalance. You can see right now we're having very big sandwich here, very big 50-50 area. Monthly bullish, weekly bearish, daily bullish. Hourly probably is going to be bearish right now. So in such cases, you just simply wait. Don't try to bet on what is going to happen. Of course, if you try to bet, then you'd like to bet on the monthly because it's the higher time frame, so which is long bias therefore. But of course, this is not always the case because you always have to be reading between all the time frames. The bullish bias is gonna be when everything bearish fails. So when that weekly fails, when everything like other, pretty much here, we also have another weekly bearish imbalance. So we have a lot of barriers on US30 that can stop price from going higher. So right now, again, if I'm actually looking for something on this one, I would say I'm not. Daily time frame came in rejected, but we're coming from the weekly. And then the hourly time frame gave a very sharp drop. But it doesn't look like it's holding on that drop, but we also don't have anything bullish. Again, if I start doubting and if I start trying to figure it out, it usually means that I don't have a clear bias, I don't have a clear context. So if I don't have a clear bias, I'm not even going to be looking for zones to be entering from. So I will say, let's just give it some time to see how this sandwich is going to develop. Are we going to pop above this weekly zone? Then I'm going to try looking for longs, targeting this next area of potential struggle, which is the weekly. Are we going to start pushing lower on the hourly time frame? So is the hourly time frame going to start pushing lower? Then I'm going to target this monthly bullish imbalance. I have a target for everything. I just need to see where the market wants to go and what sentiment it's going to give me. So for US30 specifically, I am going to be waiting. Okay, going to be waiting. Let me know if you have a potential bias on that one. Personally, again, I don't, and that's perfectly okay. All right, let's make full circle back all the way to the DXY. The DXY is very nicely bullish. All right, so I'm bullish on the DXY, which usually also means bearish indices. So bearish stock market, and of course, bearish major pairs, EU, GU, AU, NU. Okay, we're having a very low hanging fruit in the form of this weekly high because the market is right now coming from a weekly imbalance. So I'm looking for that DXY to reach that weekly high. And then in the meantime, looking to, for example, short Euro USD until the DXY reaches that target, short GU, and of course, short the rest. AUD/USD is not giving me a very nice shorting bias. However, so I'm mainly going to be focusing on EU and GU for short. AU and NZUSD, there are some kind of moving a little bit on their own. So I wouldn't link them a lot to the DXY. Okay. Gold, we have to wait. We have to wait because we are currently in a little bit of a supply and demand sandwich, reacting from the weekly, but coming into the daily. The hourly time frame is so far actually bullish, but I would love to see a little bit more confirmation for the market to actually make another order flow range going higher and then to potentially go long. If it fails this last hourly bullish range, then I'm going to go short, targeting this low down there. JPYs are just massively expanding, so I would wait for all of them to form potential daily bullish imbalances on Monday and then to look to long them, pull back, and then long. But be aware that they're reaching very big areas of liquidity. Like GJ is already taking out like a 2000 and I don't know what high. So again, be careful because they can start pulling back. Indices are giving me mixed signals. They're all reacting from a monthly bullish imbalance. And right now, they're all having a little bit of a supply and demand sandwich situation, tapping into monthly bullish, weekly bearish, daily bullish, hourly bearish, and like all of that stuff. So again, in situations like this, you usually just simply wait to see which hand is going to prevail. Now we have a lot of news next week, especially USD news, so that can cause the market to make a little bit of a turmoil, maybe to consolidate a little bit, and then get clear bias after the news. So I'm willing to sacrifice 1 week here to have a look what is going to be happening on the indices in order to then later trade them with clarity. Nasdaq has this bearish weekly imbalance right now that it can tap. The daily time frame is also bullish. The 40 time frame is also bullish. So I am getting a very nice short-term bullishness on the indices. But if this is going to prevail, right? If we're actually going to be getting a bullish dollar, well, of course, let's see. So Fanatics, let me know how you performed this week. Let me know what trades did you take, and let me know what is your main kind of pair that you're watching for next week. Are you going to be trading? Of course, because we have a lot of news. Let me know all about your week and all about your performance. I love reading the comments. I wish you a lovely weekend, and I wish you a crushing week ahead. But again, make sure to stay patient and stay vigilant for all the news that we have.